Hello, this is Encik Muniandi.
Encik Muniandi is a Malaysian resident taxpayer who operates a freelance software consultancy as a sole proprietorship. While filling his Form B for YA 2024, he claimed a deduction of 40,000 ringgit for business travelling and entertainment expenses.
This is the Form B.
However, on 15th of December 2025, the IRBM raised a notice of additional assessment for YA 2024 against Encik Muniandi. The tax auditor disallowed the entire 40,000 ringgit deduction because Encik Muniandi failed to provide any valid invoices, logbook or business receipt on substantiate the claim. Encik Muniandi strongly disagrees, claiming the officer was too strict.
This is a Notice of Additional Assessment Form JA.
To make matters worse, the audit revealed that Encik Muniandi had completely hidden an offshore consultancy fee of 30,000 ringgit he received in a foreign bank account, believing that the IRBM would never find out about it.
Determine the legal course of action available to Encik Muniandi if he wishes to dispute the Notice of Additional Assessment Form JA issued on 15 December 2025. State the specific form he must use, the statutory deadline for submission, and to whom the appeal should be addressed under the Income Tax Act 1967. Under Section 99 of the Income Tax Act 1967, a taxpayer who is dissatisfied with an assessment or an additional assessment has the right to appeal. To initiate the appeal, Encik Muniandi must complete and submit Form Q, which is the prescribed appeal form under the Income Tax Act. The appeal must be lodged within 30 days from the date of the notice of additional assessment was served. Since the notice was issued on 15 December 2025, the deadline for submitting Form Q is 14 January 2026. The completed Form Q must be submitted to the Director General of Inland Revenue. The Director General will first review the appeal and may revise the assessment if appropriate. If the dispute remains unresolved, the case will then be referred to the Special Commissioners of Income Tax, who are responsible for hearing and deciding tax appeals independently. Although Encik Muniandi has the legal right to appeal, it is important to note that his chances of success may be limited. This is because he failed to provide supporting documents such as invoices, receipts, and logbooks to prove that the 40,000 ringgit expenses were genuinely incurred for business purposes. Under Malaysian tax law, taxpayers are responsible for maintaining proper records to substantiate any deductions claimed.
B. Assume Encik Muniandi missed the official deadline to file his appeal due to being hospitalized and identify the legal avenue available under the Income Tax Act 1967 that allows him to apply for an extension of time to file his appeal. The second issue considers a situation where Encik Muniandi missed the appeal deadline because he was hospitalized. In this circumstance, the Income Tax Act 1967 provides a legal remedy. Under Section 100 of the Income Tax Act 1967, a taxpayer who is unable to submit Form Q within the prescribed 30-day period may apply for an extension of time to file the appeal. To do so, Encik Muniandi must submit Form N together with a written explanation detailing the reasons for the delay. Since hospitalization is generally considered a valid and reasonable cause, he should also provide supporting medical documents such as a medical certificate or hospital discharge report. This is the Form N.
C. Analyze the legal implication of Encik Muniandi deliberately hiding the RM30,000 consultancy fee in an offshore account. The final issue concerns Encik Muniandi's deliberate concealment of 30,000 ringgit consultancy income received through an offshore bank account. This is a serious violation of the Income Tax Act 1967. By intentionally failing to declare taxable income, Encik Muniandi has submitted an incorrect tax return. Under Section 113, Subsection 1, Subsection A of the Income Tax Act 1967, a taxpayer who make an incorrect return by omitting taxable income may be subject to an additional assessment and penalty imposed by the Director of Inland Revenue. The IRMB has the authority to reassess the taxpayer's income, recover the unpaid tax, and impose the appropriate penalties provided under the Act. Furthermore, if the concealment is proven to be deliberately and fraudulent, Section 114 of the Income Tax Act 1967 may apply upon conviction. The taxpayer may face a fine, imprisonment, or both, together with an additional penalty based on the amount of tax that was undercharged. This case demonstrates that taxpayer must declare all taxable income regardless of whether it is received in Malaysia or through an overseas bank account, where the income is taxable under Malaysian tax law. Attempting to conceal income may result in insignificant financial penalties and legal consequences.
In conclusion, Encik Mulyadi has the legal right to appeal against the notice of additional assessment by submitting Form Q within 30 days under Section 99 of the Income Tax Act 1967. If he misses the deadline due to hospitalization, he may apply for an extension of time by submitting Form N under Section 100. However, deliberately causing 30,000 ringgit of consultancy income is a serious offence that may result in additional assessments, penalties, and possible prosecution under Section 113 and 114. This case highlights the importance of maintaining proper business records, filing tax returns accurately, declaring all taxable income honestly, and understanding taxpayers' rights and responsibilities under Malaysian tax law. That's all from us. Thank you.